Do you own cryptocurrency? Do you know what your tax liability is? Hi, I'm Simon Dippenaar and I'm an attorney. The huge growth in the use of cryptocurrency around the globe has led many people to wonder about cryptocurrency taxation. Crypto may be outside of the conventional banking system and existing currencies, but income is income, whatever currency it is in. For example, if you own a property overseas and earn a rental income in euros, you are not exempt from being taxed on that income. There are laws that determine where and how what income should be taxed. When it comes to the legal framework for cryptocurrency, including taxation, a massive contrast exists between developing and developed countries. Policymakers in developed countries such as Canada and Germany are continually seeking to understand the extent of cryptocurrency use. They've been working on a regulatory structure that addresses concerns surrounding virtual currencies. In less developed countries, this process has been slow and little progress has been made. The latest development in South Africa has been the recognition of these intangible assets as financial products by the South African Reserve Bank. Now, what steps have other countries taken to legitimize cryptocurrency and ensure fair cryptocurrency taxation? In Canada, in November 2013, the Canadian Revenue Agency proposed two principles for Bitcoin taxation. Bitcoin is taxed in the context of buy and sell transactions. Bitcoin is taxed as a securities transaction. If the transaction relates to an income-generating endeavor, the proceeds are governed by the Canadian Income Tax Act. Another interesting aspect considered by Canadian legislators is the taxation of Bitcoin mining. Any party who engages in the mining of Bitcoin holds some form of intangible inventory. Arguably, this is a form of capital that will require valuation at the end of each tax year. Canada has set out methods for valuing this type of inventory, but the South African Reserve Service has not yet tackled this. In Germany, the two most important pieces of legislation relating to cryptocurrency are the Value Added Tax Act and the Income Tax Act. If cryptocurrency is used as private money in exchange for goods or services, VAT will apply to the amount of cryptocurrency the consumer pays. The value of cryptocurrency fluctuates wildly and rapidly, so German policymakers have decreed that VAT applies to these transactions at the moment the consumer pays and receives the goods or services, and not when the business receives the cryptocurrency. While cryptocurrencies are not classed as currency under South African law, they are still regarded as assets for taxation purposes. It is a common misconception that only capital gains tax applies to cryptocurrencies in South Africa. The current regulatory framework also allows for income tax rules to apply. Taxpayers are required to declare gains or losses of their crypto assets as part of their taxable income at the end of each financial year. Now, depending on the circumstances of each case, either capital gains tax or normal income tax will apply. In June 2021, the Intergovernmental FinTech Working Group released a position paper to provide specific recommendations for the development of a regulatory framework for crypto assets. SARS is only one of the many role players in South Africa, and the South African Reserve Bank is taking the lead. Until a structure has been established, tested and approved, the full extent of the tax implications in South Africa cannot be fully determined. If you want more information about the world of cryptocurrency, give me a call on the number in the signature below.